Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, January 24th, and we are in the middle of the second trading day of the week. We have DXY in front of us. No material change since yesterday. Like I said, very much sitting in the same exact range, no breakout higher or lower. The longer DXY ranges, the more, especially kind of, a bearish range, making higher lows and lower highs here. So, on a downward trajectory. So if this continues, risk should still continue to breathe, especially if this does end up dropping down to the next support level. So very much something to keep in mind moving forward. So, we may see a little bit more relief until a final break, but let's go ahead and dive in. So looking at equities, we obviously have moved higher. We're still underneath the previous daily close. If you can get above the previous daily close, 4040 is a solid target. We did mention yesterday after 4040, we were expecting a bit of a sell-off, a bit more exacerbated than we expected as it came down right back to the lower end of the range, right around 39.90, and it quickly recovered. So we're sitting in this little range right here. 4040 is still going to act as resistance. We've got a little bit of support hanging out here from some of the previous trading last week, but really need to stay above 39.90 for bullish continuation. If you break that, you are starting to trickle down to the 1 hour 200 estimated moving average, as well as support at 39.50. So stay above this VWAP, and you've still probably got a little bit of bullish gusto in you. And if you start creeping down and break beneath these candles, the bodies of the candles, I should say, then things start to get a little hairy. So tough to get a really good read on equities. I would say, this definitely looks a little bit more bearish than bullish. We have, rejected at the previous daily close, bit of a lower high. We're still above the VWAP, so keep a keen eye on the VWAP, sitting right around 4K right now as kind of a last ditch hope. If that holds, then we're probably headed back up to 4040. And of course, if we end up trickling down, then we're, back to support or lower. So no real clear read on equities. I know a lot of people are probably flat. It does seem like we may get one kind of spike higher. We haven't really seen any real rejection lower. Nothing that, nothing that I would call really a spike or washing out a lot of leverage. So there's definitely some room in the bull fodder, but we still need to hit these key levels. And until we get above the previous daily close, it's really a no trade for me. So looking at Bitcoin, potential, ugly formation here with a lower high kind of rolling over, forming potentially a double top, but really need to crack below, I think the Monday low to really be considered bearish. Really need to get beneath the Sunday low, I should say, but Monday low really the first target up. So we've also got this bullish trend that's been live since the 12th of January that we're still riding. So the important to keep an eye on that and how it coincides with support at 22.5. So very similar to equities, get above the previous daily close, which coincides currently with the VWAP. Then you're moving higher towards 23.5. We tried that yesterday and got cut down at 23.1. So we continued our range battle here. Typically, I would expect, some sort of retap around 22.6 before potentially moving higher. And, if we get that, then maybe it coincides with this trend line, and then we end up moving higher. If you wanted to play the trend line regardless, then you just set a stop, slightly beneath the bullish trend, and then try and play that higher. Right now, this is really a no trade for me. We're sitting in the dead center of the range. We have no real indication of an interest going higher or lower. We're sitting in these VWAP bands, just crowding around the VWAP since late last night. So no real signal for me. If we get above 23, if we confirm above 23.3, you got a good long setup. If you confirm below 22.5, then you've got a good, like this or like that. Then there's your good short or long setups. But also, if we creep out of here and don't confirm, we end up deviating over here. That's a really good short opportunity, either back to the end of the range or all the way down lower. And alternatively, if we let me get rid of these because I think we're understanding of really where things can go from the center of the range. If you end up not confirming below 22.4 and you come back up here, then that's a really good long back up to the top of the range or higher. So look for potential swing failure pattern. That's why we want to see these above or below the range, because if we get a swing failure pattern that brings us back into the range, then you have a really good long target to the top of the range, and vice versa. If it goes above the range and comes back in for deviation, then you have it the opposite way. So pardon me there. That's how I would prefer to trade this, is something, a swing failure pattern back into the range or a confirmation out of the range, higher or lower. Very similar for ETH, but I think the interesting thing about ETH is it's sitting on that bearish or that bullish trend that we mentioned in relation to Bitcoin, starting on the same day. ETH is just riding the trend much more closely. Of course, looking at ETH BTC in relation to when we spoke yesterday, it has dropped lower. We did say it definitely might be getting exhausted, but we've seen no confirmation yet. So ETH BTC still looking a little bearish, although this is where you would expect to see some sort of reversal. There is no confirmation or indication of that yet. So Bitcoin still looking stronger than Ethereum. So if you wanted to play this long, the easiest way is long here and set your stop. Maybe 1600, something like that. And then maybe set it a little bit higher than that. Maybe 1606, something like that. But if you want to play the long, it's here. But I think probably the safer play again is get above the range, deviate back in. That's a short. Get under the range, deviate back in. That's a long. Confirm above 1650. That's a long. Confirm under 1600. That's a short. So I think that's probably the safer way to play it after all this volatility. Of course, you can make some good scout plays. Maybe you get a long here, back up to the previous daily close, maybe back up to the POC, but alternatively could smack right through, and then you are back at support at 1600 and waiting for a potential good long opportunity. So I think the longs or the shorts at resistance and support, definitely the safer play. But when I'm looking at the chart, we haven't really seen any blow off top. There's been no explosion on either end of the extremes, is a good way to say it. So without that kind of blow off top or extreme price action at extreme points of the range, it's tough to really start getting being a true bear for this rally at this stage. Do I think we're going to come off eventually? Yes. We have a flat yearly and monthly open. Let me see. I think it's on ETH as well, just due to how many lines I have. Yeah. So actually what I can do here is remove drawing. So flat monthly open, flat yearly open. These typically end up getting retested. So if you haven't bought long-term yet, typically these will end up getting retested. This is very rare for the market to not retest a flat open like this. So very good, indication. If you are bullish, maybe over the next weeks or months, we are likely to retest that value at some point in time. So, just something to consider as we continue down the path of figuring out what in the heck crypto wants to do. So, sorry for all the stuff. I need my lines back. There we go. Okay. So, playing off this trend a little bit, not the worst long in the world. You have your invalidation ready. If you're still waiting for a long, wait for that deviation to go higher. If you're still waiting to go short, wait for that potential deviation to go short, or wait for your confirmation and push it and wait for price to push it in the direction that it confirms. The data that we got this morning, so services and manufacturing PMI was a miss this morning, which is why we probably saw equities, come off their highs a little bit and have that volatility shortly after the open. But I think the real fun numbers are going to be tomorrow. I mean, not tomorrow, Thursday and Friday, which are GDP and PCE. So keep an eye on those for potential changes in momentum or potential continuation of momentum, depending on if they are misses or beats. Looking at the Bitcoin chart right now, we can see it's getting a little life. Let's load up our ticker tape and see if we can make any inferences before we go. Does look like spot and perps are relatively in line. No real divergence there, which is positive. You definitely want to see that. If we saw spot pick up above perps, going into this drive, that'd be very, very positive. We definitely like to see more spot buys than perps. It is typically a sign of momentum in whatever direction the price is headed, meaning there's spot CBD and perp CBD are headed higher. So looking good from that perspective, and that long idea for ETH is definitely holding solid for the time being. And while we have no divergence, it definitely does look like a formation that you may want to long, at least in the short term. So that is what we're looking at for today. We know our triggers for higher or lower. We're sitting in a range. We have a good setup, right here in the immediate time. But I think for larger swings, larger trades, you're going to want for that confirmation or invalidation that will likely come this week or early next, due to the fact that we have all the data coming in this week. We have earnings still, and we have FOMC next Thursday, which should bring more fun to our decision making. So good luck, happy trading. Speak to everybody tomorrow.